Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Pierre, Debbas, founding member and partner of the real estate law firm Debbas, to discuss the key factors that will influence each sector of the 2021 real estate market. Pierre, it's great to see you as always. Welcome back to Trade Talks.
Thank you, Jill. Great to see you. Thanks for having me.
Let's start with the housing market, which was arguably the biggest beneficiary of COVID-19. Do you expect that momentum to continue in 2021?
You know, the housing market, like you said, it was 100% the biggest beneficiary of what happened last year. And when you look at the statistics, you know, the crazy thing is that the volume of houses that traded throughout the entire country was at a 14-year high. When you think about it, that's pre-recession, pre-subprime lending levels. So when you're, you know, a trend of that nature, how long can it go on for? I don't foresee it going into 2021, or sorry, increasing. It's going to level off. And the reason I'm confident in that statement is that what was the factor that drove the housing market and the demand? It was the uproar that was caused because of the shutdown and the pandemic. People moving away from largely densely populated areas to more remote areas and areas that they would not have been able to live in, you know, without the working from home, you know, aspect that we've all become used to. So they, you know, that trend, and I think that the urgency of that in moving into more rural areas per se is definitely going to, you know, taper off a bit. But I think it's going to be a good year for the housing market because, you know, we're talking a vaccine coming out, is out now, but becoming widely distributed, hopefully, you know, at some point this year, which will, you know, hopefully result in increased employment. And when you take increased employment and keeping interest rates at the levels that they're at, which none of us foresee interest rates increasing anytime soon, that's going to bode well for the housing market. So I think that you'll still see a strong housing market. I just don't think you'll see the, you know, increase that you saw last year, you know, continue.
Well, Pierre, here's $1 million question, right? How are employees evaluating office space? Because as we have all learned through the pandemic, the level of productivity at home is exponential relative to having to deal with the commute and being in office and travel all the time.
You know, I debate this topic a lot myself because I'm coming from the perspective of advising several small businesses and how to, you know, remanage their real estate or, you know, renegotiate their leases. I'm also a small business owner myself, you know, principal in a company of 40 employees. And we're always talking about, you know, what's the world going to look like when we do reopen? Is the 100% of the workforce going to come back? And, you know, I think that you're going to have a hybrid of, for most professionals, of a working from home component forever. And if you have that hybrid schedule, it's going to decrease your need for space. The thing is, it's not going to ever eliminate your need for space. Most companies are going to need to have physical office space. Well, if you have 20,000 square feet, could you potentially, you know, survive on 15,000 moving forward? Probably. You know, it depends on your industry. So I think you're going to see as leases come up for expiration and there's turnover, you're going to see companies kind of re-envision how they utilize office space in terms of, you know, maybe you'll see a higher demand for, you know, co-working space, shared working space. You'll see flexibility in terms of, you know, the layouts of offices. Maybe people share offices, rotate, more shared space. But certainly, this is going to change how everybody views their need for, you know, commercial real estate office space.
Let's discuss hospitality and retail, two areas particularly hit by the COVID-19 pandemic. How do you expect them to fare in 2021?
You know, retail was already, you know, in a precarious position before the pandemic. And, you know, the biggest obstacle now really in the retail sector is going to be restaurants. You know, I'll give you a statistic in New York City, you know, we just shut down indoor dining all over again a week or two ago. And right now, you know, they're anticipating anywhere from 50 to 65% of all restaurants will close permanently. So if you have such a high volume of closures in the restaurant sector, you know, when is the demand going to come back to take over that retail space in the future? It could be, I mean, I don't know what the absorption rate could possibly be. It could be several years. And in terms of hospitality, you know, tourism definitely is going to come back to pre-pandemic records until a vaccine has been widely distributed and proven to be effective. You know, we rely, you know, I'm physically in New York City, and I can tell you now, you can notice a significant difference in the city with the lack of tourism, especially during this holiday season. So, you know, hospitality I think will bounce back quicker than the restaurant sector of retail. In terms of retail from the perspective of stores, this could actually be a good entryway to bring back the mom and pops of the world. You know, when demand is going to be so low and supply is going to be so astronomically high from what we're anticipating, it has to result in a reduction of rents, asking rents by landlords. And if reduction of rents takes place, you know, the beneficiary could be small businesses re-entering the retail marketplace in major cities.
Yeah, and that's a good point that you bring up, because let's say it's late Q3, Q4, when we're vaccinations through the population and people are jonesing, quite frankly, to get back out there to restaurants and travel and so forth. There might not be enough supply to handle this demand that's coming back. So it's going to be interesting to watch what happens to prices there, because if 50 to 60% of restaurants are closed, but you have 80 to 90% of the population wanting to go back out again, it's going to be interesting to see how that plays out from a more macroeconomic perspective. But I want to ask you about the banks. How are they handling commercial loans? Because if renters can't pay their landlords, it means landlords probably can't pay their banks. What's happening there?
We're seeing moratoriums on evictions and foreclosures throughout the country, stipulated by the federal government and local state governments. Now, we are at still the stage of the forbearance periods where banks are, on a wait and see pattern. Some people, like you said, are very optimistic that we're going to have a vaccine and it's going to be a rush of people back into the workplace and rush of people back into society, and this will correct itself relatively quickly, and landlords can afford their debt service again. Others are not as optimistic, and we're anticipating that there'll be a lot of restructuring of debt and certainly an uptick in foreclosures that you'll probably see in Q2 or Q3 of this year. A lot of the forbearances were 6-month forbearances, 9-month forbearances that should be coming up for expiration, in the beginning of Q2 of this year. And that's the point where we'll see if banks are going to be reasonable and renegotiate debt, or are banks going to take the aggressive position of foreclosing and taking over properties. So we're definitely not there just yet. But you're right. I mean, it's how the banks react to this is going to dictate, I think, the future of commercial real estate.
And finally, how will the incoming Biden administration impact policy, regulation, and politics as it relates to real estate?
It really depends. I think the two biggest factors with the Biden presidency are, not that the interest rates are necessarily a policy that's issued by the White House, but it's no secret that Trump had, pressured the Fed a number of times over the years to keep rates at record level lows, which the real estate market has been obviously the biggest beneficiary. So will Biden continue in that trend when the Fed wants to increase rates or not, I think is one of the most important aspects of how his administration can impact the real estate market. And then at the same token, is Biden going to try to implement any policy to reverse some of the aspects of tax reform that impacted the market and scrap programs such as the 1031 exchange, which has always been a huge benefit to the real estate market? So I think those are the biggest variables in terms of how his administration can impact our market.
All right, Pierre, always great to catch up with you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.